Musi, what's going on, guys? Long weekend, time to reflect. All the liquidation emails you receive at 2 a.m., abruptly waking you up from your nightmares of getting liquidated. Yes, it's that season, that time of season where market makers are on the beach liquidating plebs from their cabana, getting drunk. It's so over. Hey boys, I'm gonna go over Pepe. Jokes aside, this is illiquid season right now. Every year, end of August tends to be very low liquidity trading conditions. If you're in trades, I would always suggest around this time of year, dial back the leverage, dial back the size, and just try to survive until potentially September. You get a little bit more of a liquidity injection, and definitely October is favorable for crypto. If you go over the last 14 years, I think it's 65% or 70 that it's an up only month. So just wait for October. Don't have to give it all away in end of August last week. Brutal. Okay, boys, this is Pepe. We're gonna go over some ideas, where to enter and how to trade this as a swing, and what projections we could look at. So clearly, looking at the chart, we're in an uptrend. This could potentially be, Jesus Christ, man. I don't know if you guys could hear the cop cars going wild. People getting fucked up for long weekend, man. This could be a reaccumulation zone right here. But if we have a look at the core assets I have on my chart on the daily, you'll notice here this is a first level of supply when we broke out originally from this high. And it weaved in and out of it for a bit until it confirmed, and then it sent. On the way down, I used it as structure, caught a bit of a relief bounce, and then here you false bearish breakdown. And we're building below it a little bit, but you can see it's not really receptive to dying over here. So the way I'm sizing up this range is using volume, which I tend to use when you're in a critical level or at the reactive zone. I just want to see where the high volume node is and where we need to accept above or reject below. In this case, the value area is very defined. You know, it's a perfect bell curve here with a huge spike in the middle, which is healthy. This is the way volume should look like. Some charts look erratic, you know? You'll get a value area that looks like just absolute retardation, right? This one is actually just perfect, the way it's symmetrical, and, you know, it flares out in the middle. So in this range, if we're looking at this new accumulation range that formed, and then locally over here, we plot a volume profile from relatively equal highs to relatively equal lows. This is definitely a local range. You'll notice that the point of control comes in right in between the two here inside of our reactive zone. So this is validating for me that this is the most key level that we want to use as either reclaimed dynamic support or a bearish back test to send it back down to the value area low. So that's how I use volume profile, composite volume profile, and local range profile. In this case, the best version I'm looking for, or the setup, I'm already in and I've taken profits, but the idea would be I want to see this candle start closing above the reactive zone and above these 2 point of controls. If it does, you'll notice that the volume kind of tapers off a bit after that. So the assumption is it's going to rebalance this inefficient part of the chart. Aside from that, you have a target right here. You have a lot of liquidity piled up in this range. So short sellers that didn't take profit, they're probably going to be at the mercy of market makers on the beach and get nuked. Also, you'll notice when we leave the value area between the two borders here, There's a huge low volume node above this. So this part of the chart right here was driven by perps in all likelihood. I don't have that data on me, obviously, right now, but I imagine usually when you get an irrational, inefficient move like this outside of the value area, it's usually perp driven. And the smart money spot buyers that started the move, they were buying inside the value range, either at the value area low or above this POC, high volume node. So my assumption is if we get above this inefficiency here, it's probably going to reprice fairly fast and you should get acceleration above 10.5. So I'm really watching for that area. This is the harmonic we're coming off of. A lot of you know me as a hybrid trader. I trade liquidity with harmonics as confluence, and you can see the wave structure here. I don't count this wick. This was basically a rebalance on the weekly, I believe. Yeah, so tag the weekly inefficiency. But the overall structure is an 886 harmonic, which is a pretty clean bat, in my opinion. This one went a little deeper, almost to the 618, but it's still under the 618, so this is a valid bat. And perfect bats usually have projection to the 2.0 from B to C. So your type 1 reaction coming out of this is going to be to the 382 fib when you measure from A to D. So you can see our 382s there. It looks like it got front run here with some profit taking, but between D and where we are currently on price, you could see an accumulation where it's accumulating at higher lows, which is always the setup you're looking for on a macro harmonic. It means that more people are buying and willing to buy at a higher price than previously. So there's more volume, more buying, and the price is ascending, which is all the elements you need for this to reprice. So normally after a type 1, what you're looking for is a pullback into value, and then you're targeting the type 2 reaction, which is going to be at the 618 of this wave structure. So my target is essentially 0.13, and it lines up nicely with that liquidity pool. So this is going to be a really nice type 2 reaction if we get what I'm looking for, which is a confirmation close above the reactive zone and a retest, successful retest. That would probably send the price much higher and complete another wave structure. Now, this is the active harmonic. There are some other ones I'm tracking, but you can't be reliant on these because they haven't hit D's yet, which is confirming terminal bars for harmonics, right? So these are the two I'm watching right now. You could see one with a lower low, 113. That's going to be your shark. Your target is going to be between this potential reversal zone. It's basically a combination of ratios for the active wave structure that suggests price is going to go to here. So that's the larger harmonic in play. Then you have one starting here at B, which was the midpoint of this larger harmonic with a higher low and projecting to the 886. So essentially the immediate harmonic that I'm trading is into these highs at B, and there's a huge cluster of liquidity waiting there. So this is the active harmonic I'm trading. What might happen and what I'm looking for is just that reactive zone to hold. If this holds and we get basically 4 higher lows in an accumulative uptrend, you're definitely going to target D, and that's going to be a pretty heavy profit taking area for the swing. And then obviously you want to have some on in case we break above B. I talk about this occasionally. It's my favorite harmonic trade. Aside from, the actual reversal zone trades, what you're doing in this one is waiting for B to get inverted, and then you're longing it to D. So this is a harmonic inversion. You usually get acceleration in that last leg of the move to the final target over here. So essentially you want to be positioned from here to here, and you want to be taking heavy profits here, here, and here, and then obviously here as well. So that's the harmonic structure I'm trading. One last thing I wanted to show. I like to use projections, especially with meme coins. They tend to be really deadly accurate with meme coins. I don't know what it is, but maybe it's just the culture of trading meme coins. If the majority of people acknowledge a certain way of trading, like these fib projections, then that's what's going to happen. It's reflexivity. If everyone believes that the projection is going to 1272, then the majority of people will trade in that fashion and take profits at the 1272. So here's what I see. This right here, marking the original trend base low, I'm anchoring to the absolute nadir, which is the bottom of the move where it started, to this mid top of the impulse basically, and then the corrective retracement is where you're going to anchor again. You could see the original projection went to that fib pocket that I trade with, and then it rejected and pulled back to value. So deep value was the 886 harmonic. So then we can apply a second trend base fib, which would be from this low to that impulse high to this pivot here, and then your projection ends up being in this box. So essentially you're trying to get into a swing trade from here into these highs, assuming that this structure and reaccumulation ends up marking up based on the previous trend base fib. So let's see what happens. There's no way to predict, and that's not the business I'm in. I'm just in the business of identifying common patterns that play out fairly often, that have been reliable enough in the past, allowing you to manage risk and potentially max out reward. That's what we do as traders. We're not in the business of predicting. We're in the business of minimizing risk and maximizing reward. So hopefully this plays out. If it doesn't, go fuck yourself, get liquidated, get wrecked, lates. Have a good day.